John Piper with the weekend video clip, and it's Saturday the 18th of October, and we're looking here at the daily chart of FTSE just to show the action over the last few months. Basically had this sort of sideways drift with a slight upward bias. Saw a new peak for the year there, failing to take out the all-time high at 6,950, which came in on New Year's Eve 1999, or at least maybe a day or two short of that. We've now got a fairly clear 1, 2, 3, 4, 5, suggesting that we have now seen the end of the first leg down. Very solid bounce here. We haven't reached the 38.2% level yet. My expectation would be that we're going to see another pullback, a retest of the lows, maybe not that deep, see how it goes. Then a bounce, 6,400 would be the first more major resistance level, with 6.6 around the 61.8% level and 6.5 around 50%. But those are approximate figures. The actual retracement figures are slightly different, but 6.4, 6.5 and 6.6 seem to be the key levels right now. In the markets, you can see Elliott, you can see the reversal. What you're never quite sure about is whether we've just seen a complete correction. It's gone down 15%. Some people call that a bear market, certainly been pretty rapid, or whether it's just the beginning of something even more serious. That should become clearer during the course of the next few sessions. The form that the rally and the tests and the retests and all those things take should give us some clues. But I would certainly think, having seen a few weeks of downside, now about 4 weeks, we should see at least a week, maybe 2 weeks of upside. So it may well be that not much will happen until November. Having said all that, of course, we have got the Christmas influence, which is now getting stronger, as it were. Certainly by the time you'd expect the rally to finish, the Xmas period might start to exert an influence. So it may be that we're going to see a bigger rally than that, and just have to monitor this as we go forward. But right now, the shorter term, I would expect the market to be trending up, albeit with a retest coming in as well. Look at the DAX now. Right, the daily chart of the DAX slightly different. We have seen an initial leg down from the June peak thereabouts. So we saw one move there, then a retest, quite a strong retest obviously, and now this big fall which I showed the count in yesterday's newsletter. So again, we've got an even clearer 5 waves down the DAX in fact, but again there's a strong move back up again, and again haven't reached the 38.2% level yet. So again, some kind of retest is going to come in at some point, and then perhaps another rally. And that'll be sort of setting the scene. So same parameters apply. The difference being, of course, that on the DAX we could have seen a complete ABC move, A, B, C. On FTSE we've just got that one decline, although the internal counts, wave counts on that decline are not so clear. Although we've got 5 waves, they don't necessarily count as an impulsive move, although clearly impulsive later on in the piece. So same parameters. This would count as if this is a continuing bear market, this is a 1, that's a 2. This would be 1 of 3, this would be 2 of 3, and then a third of a third, a big third of a third coming in later this month. If the various parameters stay in place, as it were. Looking at the internals of the rally so far, you can count the sort of 1, 2, 3, ABC 4, and then a 5th wave, 1, 2, 3. So maybe we're going to see a bit more upside Monday, and then the thing might start to fall back a bit. How dynamic that move is, as I say, will tell us quite a lot, I think. Right, Dow. Well, the pattern here is quite different, really. We saw the peak here, no real change there. I think that counts as a 1, well, it counts best in AB series. As that's an ABC A, then that would be a ABC B. Then we've got a 1, 2, 1, 2. It could be a 3, a small 4 and a 5, I guess. But again, and now I've got this rally up to there, so not so clear. Again, the same sort of parameters. We're going to see a retest at some point. Of course, the Dow's already seen a retest. Let's go down a leg here. Just a quick word on expiry. On the Dow or the S&P, options actually expire on the Thursday evening, but they're marked to the open on the Friday. So this big gap here can be seen to change the option pricing from quite a lot of large positions. Manipulation can come into that kind of thing, although the market was actually driven from what happened in Europe, really. So right now, in fact, the Dow hasn't really done a huge amount. It went sort of sideways yesterday, largely sideways. I mean, a big move, of course. A lot more action on Thursday, which is the day into expiry. So not so much happening here. A good rally there, but it's really these big gaps which have changed things a bit. Although one was down, one was up. So not so clearly on the Dow. Also have the Nikkei, which just made it above 16,000 again, only to collapse once more, down to 14,500. So another solid 10% plus move. Let's have a look at the breakdown on this one. Not the best chart in the world with all these unfilled gaps everywhere, but there's a possible 1 here, 2 maybe, 3 to there perhaps, 4. And then I've got a fairly good 5 waves down here, but the other moves could easily be corrective. So it could all be just a big ABC. Again, the rally should not. There is a rally yet. Hasn't rallied at all really. But I'd expect some bounce back on Monday here. I mean, we could do a 4 and a 5. Perhaps that might be a clearer pattern. But again, the actual internal structure up here is not so clear. Right, gold. Right, gold's looking a bit more encouraging. First, this rally is now looking a bit too big for be a 4th wave, which was the count. The count I said was 1, 2, 3, 4, 5. It's not impossible, but it's quite large now to be a 4th wave. Also, we've seen no real hesitation with these big rallies in equities, which is, I think, the first time that gold has actually sustained such a move. So, although it's still not out of the woods, there is some encouragement. This rally may be more important than I've been thinking, but I'd still prefer to see a move, into this territory down here, and a decent buying spike just to wash away all the various negatives around the 1180 level. Right, finally a quick look at pound dollar. We've had this big decline here, which you can either count as a let me give to these arrows. Either count as a 1, 2, 3, 4. Then quite a nice little 5 here with then decent internal structure. 3, 4, 5. So that would be a complete move to there. 160 is quite a major level really on this market. So a false break above 160 and then a solid rally, maybe back up to retest this around 165. Fits in quite well. I think that's my favoured count at the moment. The alternative is that actually this is a 1 down to here. This is the 2, and this is actually just 1 of 3. So a weak rally. Like that maybe, and then a much faster fall. So that's really the 2 parameters to look out for. Clearly any break below here, so an extreme stop below there, might work very well. The only problem with that, of course, is that little traders like to fade that. I mean, it's the obvious place for stops, so one may be a little more cunning than that. Maybe watch the action and trade accordingly. Okay, that's all for today. If you found it interesting and useful, back with the opening report on Tuesday morning. Have a great weekend. Thanks for listening, and bye for now.